All right. Hello, everybody. Welcome back to another episode of the Sunday Market Futures. I am sorry I am late, but I am here. It has been a busy day, but we're here. We're alive. And oh boy, am I excited for these overnight markets that are going to open up in the next 12 minutes because, folks, we got a deal. We got a deal between the EU and the United States. This deal actually has a lot of details towards it that makes me feel it's a legit deal. Trump and the president of the European Commission sat together at a meeting today, and it was live streamed, and they both talked through the details, and both of them kind of seemed pretty excited for the deal. There's some clips we're going to take a look at and see what it has in terms of implications on the market. But obviously, if we got the EU done, that's one of the big seven. That's one of the big seven. Japan was part of that. We got that done last week. This is what the futures look like, folks. We are above 6,400. That is a new all-time high on the S&P 500. NASDAQ, all-time highs. Small caps catching up. The Dow Jones doing okay. I mean, dude, let's see. Maybe the market fades this. Maybe the market doesn't. But if this is legit, which it seems more legit than not, we might have a pretty fun market open tomorrow and a decent overnight market open in about 11 minutes as we get into it. So we're going to see how this ends up playing out, but it does look promising. Thank you everybody for being here. We are back Sunday. Hope everyone had a great weekend. If you signed up to the Miami meetup, check your email. Check your email. If you signed up to the Miami meetup, check your email. There are a bunch of sort of little action steps that you will need to partake in if you signed up to the Miami meetup. So if you did sign up, please make sure to check your email if you haven't yet. And if you can kind of take some of the steps that I laid out in that email, then we will be good to go. But we have a location for Miami. We have a date, August 23rd, 5 to 11 p.m. It can go longer than 11 p.m., but that's kind of like the base time. And we are ready to go in Miami. It's about a month away, a little bit less than a month away. Very, very excited for it. So for those that signed up, please make sure to just check your email. I just sent it out like 30 minutes ago. And we'll keep going from there. It is not too late to show up to the Miami meetup. However, there is a bit of a cap on the number of people we can have. So in the next few days, I will update everybody on if that cap is filled or not. TLDR, we can only have about 250 people, which is a lot of freaking people. And most locations, that I've talked to, you cannot go above 250, but we had like 500 signups. So in the next few days, I will confirm with everyone how much of that cap is filled. And if there's still room, which I think relatively there should still be room in a couple of days, then I will put out the link again and everyone can sign up, and we'll be accepting more people. But should be exciting. Should be very exciting going into the end of August. And it's going to be really exciting as well if this market continues to cooperate the way this market is cooperating. Bitcoin, 119.4, almost got to 120 about an hour ago. And then Ethereum, this whole morning, Ethereum has been doing its thing. 3,900. I mean, basically 3,900, 3,870. It wants to get 4,000. And I think there's a world in which we get above 4,000. So it's exciting stuff, dude. Very, very, very exciting stuff. And we're going to see ultimately how this ends up playing out. XRP at 323 as well. Yes, that is correct. XRP 323. That's up about 2%. Solana's up. All the altcoins are moving up. And that is because of the deal, or at least the perception of this deal that seems to be happening. So let's get right into it. I mean, we'll talk a lot once the overnight markets open and go deeper into the details. But this is one of the videos that I thought was really important, highlighting what this deal looks like. We'll go inside of like the things that the US and the EU gave up. But at its core, the EU is going to be buying around 750 billion of US energy. There will be 0% tariffs, and there will be reduced automotive tariffs of about 15%. There's a little bit more that we'll talk about, but that's kind of the basic structure of the deal. And here is the EU president, along with Trump, talking about this deal earlier today.
Yes, ma'am.
I have a question for the EU Commission President. What are the U.S. concessions? What is the U.S. giving up in the deal, if anything?
So the starting point was an imbalance, a surplus on our side and a deficit on the U.S. side. And we wanted to rebalance the trade relation. And we wanted to do it in a way that trade goes on between the two of us across the Atlantic, because the two biggest economies should have a good trade flow between us. And I think we hit exactly the point we wanted to find. Rebalance, but enable trade on both sides which means good jobs on both sides of the Atlantic, means prosperity on both sides of the Atlantic, and that was important for us.
And again, the energy is a very important component because we have more energy than anybody else in that sense. And I think it was very wise that they buy a lot of energy, and it's great stuff, and it solves a lot of problems. So that was a great decision, I think.
Here are some of the specifics of the deal itself.
So we're going to do the following. The European Union is going to agree to purchase from the United States $750 billion worth of energy. $750 billion worth of energy. They are going to agree to invest into the United States $600 billion more than they're investing already. So they're investing a large amount of money. You know what that amount of money is. It's very substantial, but they're going to invest an additional $600 billion. They're agreeing to open up their countries to trade at zero tariff. So that's a very big factor. Opening up their countries, all of the countries will be opened up to trade with the United States at zero tariff. And they're agreeing to purchase a vast amount of military equipment. We don't know what that number is, but it's the good news is we make the best military equipment in the world, so sort of you have to do that. I mean, until somebody tops us, which is not going to happen. We're way ahead of every other country in terms of the quality of the military equipment. You saw that recently in Iran, and you see that, unfortunately, you see that often for all the wrong reasons, right? So those things are 750 billion, 600 billion, opening up the country. We are agreeing that the tariff straight across for automobiles and everything else will be a straight across tariff of 15%. So we have a tariff of 15%. We have the opening up of all of the European countries, which I think I could say were essentially closed. I mean, you weren't exactly taking our autos, you weren't exactly taking our agriculture, and then you would have smaller things, but for the most part, it was closed. And now it's open. It's open for our companies to go in and do a good job with it. I think you'll like them. I think you'll like it. And we will, very importantly, they'll be investing a lot of money, but the military is a big number, but that's one number we're not determining. It's going to be whatever it is, but they're going to be purchasing hundreds of billions of dollars worth of military equipment. They're very important. They're going to purchase $750 billion worth of energy. So that's going to be great. And $600 billion worth of investments into the United States over and above what they have. So, and I think that basically concludes the deal. I mean, those are the main factors. I don't think there are too many other factors, other than we're going to get along great. And we have a great relationship now with NATO, which is largely the same. I mean, not exactly, but pretty close, right? Largely. And with NATO, as you know, they're going up to 5% from 2%. And the relationship is very strong with NATO. So I just want to congratulate you. I think it's great that we made a deal today instead of playing games and maybe not making a deal at all. I think it's, I'm going to let you say, but I think it's the biggest deal ever made. Thank you very much. Congratulations. So
they got it done. They got it done. And the futures love it. We are going to see in the next 3 minutes what ends up playing out in terms of this overnight market open. But look, I've heard a lot of perspectives today across the political spectrum and geographic spectrum on these deals. From some of the Europeans that I talked to, they were not happy with what the European Union gave up. One of the things that Ursula said, though, is that there has always been a surplus inside of the European Union when it comes to trade relations with the United States and a deficit with the U.S. And so her exact wording was, the confines of the deal were to create a imbalance or to resolve some of the imbalance when it comes to those surpluses and deficits. So if it seems like the EU gave up a little too much, I think that's kind of the point. I think the way the Trump administration negotiated was saying, hey, you guys have been getting a lot from us over the past decade, and now it's time for you guys to give some back. And as a result, based on, I mean, whatever you heard Trump say, Ursula did not interrupt him and say, nope, that's wrong. Nope, that she didn't pull a J Powers. Like, where are you getting this from? J Powers like, wait, $3 billion? We're not spending $3 billion. She let him say everything he said because they agreed to those deals. And the reason I think they agreed to those deals is because the Europeans kind of realized, hey, if we don't resolve some of this deficit that we have with the United States, or surplus that we have with the United States, then we're just not going to get a deal done. And so you got to give the administration credit. You got to give them credit. They got Japan. They got the EU for all intended purposes. Indonesia and the UK, smaller deals, but we got those done. Next up is India, South Korea, Canada, Mexico, and Australia. We get and then China. Oh, and then the other big update on China. We got 1 minute until the overnight market's open. We'll talk more about China, but the South China Morning Post reported that it looks like, this is not official yet, but it looks like based on what we're seeing, we will have a 90-day pause on the tariffs that were set to go into effect on August 12th between Beijing and the United States. That is also super bullish because that 90-day pause means that within those 90 days, hopefully Scott Bessent will be able to negotiate some better terms and deals. And eventually when we do have tariffs go on the United States and China back and forth, they won't be as aggressive as they were going to be on August 12th. So you got China that's probably going to get done, hopefully by the end of August. And if not done by the end of August, you have another 3 months to figure it out. You got the EU that's done. You have Japan that got done. And now it's just a question of if we can get the rest of them. And if we do, then maybe this can get very, very exciting for what has basically been one of the best bull markets that we've seen in the past couple of years. Here we go, folks. It is Sunday, July 27th, 8 p.m. The overnight markets are open. Let's see what we've got. Palantir 160 overnight on the open. Palantir 160 overnight on the open. NVIDIA 174.18 on the open. NVIDIA's green. Tessie up 1%, 319 on Tessie. Palantir right here 160 on the dot. Amazon's up almost 0.5%, 232 on Amazon. Bezos did sell the remaining of his $5 billion worth of shares on Friday. Amazon continues to gain momentum. SBET is up 6.4%. Ethereum Treasuries. HIMS is up 1.4%. Microsoft is up 0.5%. The S&P 500, 639.18 on SPY. Very close to 640. Hoodie, 106.13, up 1.2%. Hoodie's up 1%. Bitmine doesn't trade overnight, so we're not seeing anything on Bitmine. SBET does, and that one's up 6%. I would imagine Bitmine's probably going to be up a little bit more than that. SBET right here up 7.7%, at least 7%, if not more, given Ethereum has had a big run over the past 24 hours. Broadcom's up 1%. That's all-time highs. ASML is up 2%. TSM is up 0.33%. Where is the Googs? Googs, 193. Googs is up 0.5%. 193.99. Basically 194 on Google. Where is Meta? Meta's at 716. That's green. Apple is at 214.75. That's green. Rocket Lab's up 1.18%. 47.99 on Rocket Lab. Open Doors down. Open Doors down. SMR is up a little bit. Nano Nuclear is up a little bit. And then Oklo is also up a little bit. Oklo actually got a price target to $86 from one of these banks. So Oklo is getting some of that momentum. Intel right here is also up 0.43%. Let me pull it up on Legend as well so we can see some of these prices. But we're pretty damn green as we get into it. Where is Tesla again? Tesla right here, 321.69. ASTS, that did have some dilution. They are at 56.63. They're up 4%. My goodness. ASTS up 4. They were down 10% last week. They are green now. And let's see what else we have. So S&P 639.37. AMD 167. AMD almost 180. Almost 180, or sorry, 170. Grab right here is at 511. Grab is down. That's probably on low volume. Reddit right here, 151. Amazon right here, 232. Meta, 719. PayPal, 78.46. Bitcoin, 119. App, 11.368. Everything's pretty much green. Enphase is up. Microsoft's up 0.5%. Microsoft hit all-time highs on Friday. Palo Alto Networks, that's a 203. That is green. Robinhood, 106.50. Not bad. That's up 2% in the overnight markets. BMNR, is that trading? Okay, it's trading on Legend. It's not really showing you an after-hour price, but it is trading a little bit and giving you some movement. It's also like Grab, very low liquid on Legend, and so you can't really take those price movements that seriously, but it is moving green. Tesla 322, Palantir 160.39. All-time highs was 160.39. We are at 160.40. We just hit all-time highs on Palantir. Where is SOFI? SOFI 21.55. That's up about 1%. That's up about 1% in the pre-markets, or not the pre-markets, the overnight markets. LNG Cheniere, that's up 7% if the Europeans are going to be buying a lot of energy. VG, does that trade overnight? That does not. Next decade, does that trade overnight? That does not. Okay, so LNG is kind of our proxy for some of these overnight moves in the market perception of natural gas. And it looks like the Europeans are going to be buying a lot of it. That's up 7%. Which is not too bad. AMD, 168.40. SoFi again. SoFi, we got earnings coming up, folks. Tuesday. It's going to be a big day. SoFi, you got earnings. 21.51. Google right here, 194.24. Reddit, 151.20. Dell, 131. GME, 23.46. That's up a little bit. Disney, that's up a little bit. Duolingo's actually up 1.5%. Pfizer's up a little bit. Baba's up a little bit. Nubank is up a little bit. Everything's pretty much green, even if it's not crazy green. I would say what's crazy green right here is Hoodie. That's up 3%. Palantir, that's up 1%. Tessie, up 2%. NVIDIA's trying to crack 175, which it did not crack on on Friday. Maybe it cracks it right here. Meta, VG, again, doesn't trade overnight. Meta is up about 1%. Nothing crazy on Meta. Iran should be moving overnight. Iran, 18.28. That is green. And then Rocket Lab is also up just a little bit overnight as well at $48. All right, so the market likes it. The market likes it. I mean, we'll see tomorrow how much volume really comes in on these names. Palantir, 160.50, and then Hoodie, 107.85. Hood also has earnings this week, which is going to be very important. We'll talk more about that as well. Tesla, 321, and some of the big movers are doing their thing. BMNR is up 9% on Interactive Brokers. Okay, that makes sense. So that'll probably match Robinhood tomorrow morning on IBKR as well. So if BMNR is moving, that's pretty damn good. EQT, I think this is another energy play. That's up 5.4%. Is that energy? Yes, that is a natural gas company, EQT. So for those that are long natural gas, you're getting a lot of momentum in the overnight markets based on what the Europeans are doing. And you know, we'll go deeper into why the Europeans are buying this much natural gas, but it is the easiest thing they could buy, right? Like if they needed to secure the deal and Trump said, you got to give up something. I mean, I know we already export a lot of LNG to Europe, but they could always buy more. And I think theoretically, if there's a world in which they buy more from us versus some of the other countries, that could resolve parts of the surplus that we have with them, or the deficit that we have with them. And that's probably the easiest place to negotiate. So it looks like they found a sector where the Europeans, they need energy, right? It's not like you don't need energy. They just need to buy more from the United States, and that seems to be the crux of this deal. NVIDIA right here, 174.97. Google, 194.23. Google up about 0.5%. The other stock in the Max 7, Amazon, that is also still green right here, up about 0.63% as well. NVIDIA, did it touch 175? I don't see it touch. It touched 174.99 on mine. It looks like it's about to get there. Has not touched 175 yet, but hopefully it does in the overnight markets. 174.97 is what you have right here on NVIDIA. Yeah, there it is. Just trying to get to 175. 174.95 is what we got. VIX futures are down, as they should be, because some of the volatility is dying out, which is good. And it looks like we're seeing some broader momentum. It looks like we are seeing some broader momentum. Dude, this is not bad. I mean, you know, we talked on Friday about someone who bought like $20 million of 640 S&P 500 calls expiring next week. There she is, NVIDIA 175. There she goes. And now she's busting through 175. I mean, maybe they knew that we would get a trade deal done and S&P would definitely be over 640. But you had some people take some big bets last Friday, that it would happen. And here it is. Wow, NVIDIA, she's moving now, folks. She's moving now. She is moving. Open Door doesn't trade overnight, so I don't have anything on Open Door. That one's still at 249 from last week. SMCI, all right, if NVIDIA is moving, all the semis should be moving. 175.16. Let's look at the semis and see what we have. Micron, that's green. AMD, that's almost 170. That's going to feel really good to see. That'll be, dude, for the AMD folks, when you see 170, that is going to feel good. Dell right there, 131. Broadcom's up 1%. Broadcom basically all-time highs. ASML recovering a little bit. SMCI That's up 3%. Intel's even up a little bit after getting hammered on earnings. TSM crossing 247. That is a $1.27 trillion market cap. Qualcomm, that's up a little bit. That's up a little bit. Marvell, up about 1%. Then ARM, that's also up 1%. Where is Coinbase? That one should be up. Coinbase is indeed up almost 2%. Trying to get just to 400. Open Door on Yahoo Finance is up 4%. Cool. So again, some exchanges and some platforms show the overnight movements. Open Door right there, 4% on Yahoo. On Robinhood, it does not trade overnight. MicroStrategy, that one should be green as well because Bitcoin's inching its way back to 420 or to 120. MicroStrategy, yeah, that's up 3%, 415. 415. Where's Oscar? Does that trade overnight? Oscar, that one's flat overnight. Lemonade, that one is also up 1.6 overnight. And then UNH, does that trade overnight? That does indeed. UNH, we have earnings, I think, on Tuesday, if I'm not wrong, for UNH. We'll go through all the earnings that we have this week, but that will also be a very big one. UNH, yes, Tuesday morning with SOFI. Okay, that'll be a big one. Tuesday morning, that's up about 1%. CEG, is that following? This is an energy play. It already did pump last week, but that's up a little bit. Yeah, it's up 1%. CEG, they do energy. It's not as specific to natural gas as like a Cheniere, so that's why it's probably not getting a majority of the pump. But still, this is very bullish for any energy play. LNG now up 8.26%. This company's also not in the S&P 500. Market cap is $50 billion. Will not surprise me if they're a candidate in the coming quarters to get in. 243.99 on Cheniere. Nvidia 175.11. AMD 168.83. Got Robinhood 107 and then Palantir 160.60. That's a new all-time high for Palantir in the overnight markets. Tesla right here 320. Palantir is a top 20 company on the planet by market cap. We talked about it a lot on Palantir Weekly. We'll talk a little bit more later in the show, but for those that didn't catch Palantir Weekly, you can watch that and we go deeper into kind of how we're thinking of Palantir. Grab back up to 535 right there. Google 194 and then AMD 169, Nvidia 175.08, Tesla 320, Palantir 160 on the day. Where's the S&P? S&P is flirting with 640. I think SPX has it. SPY doesn't. Robinhood 107.09, S&P 639, and then Palantir 160.68. There's Jose. Open the markets. Open the markets. We're green. We're green. Okay, so let's do the first poll of the night, and then we'll get into all the topics we have. Here's the question. Does the market fade this tomorrow? Does the market fade this? Does the market fade this deal? Yes or no? Meaning, whatever pump we're seeing in the overnight markets kind of just dies out as the market opens tomorrow. We get a lot more volume coming in, and people say, it's not that exciting. I mean, I think there's a world in which that could happen. Obviously, I just don't see it to be that likely because this is a big deal. This is like getting the EU in the books before August 1st, which it seemed like this weekend it was going to happen, and it did end up happening. It's a big deal. And then this that we got in the morning, China and the U.S. extending the tariff pause at Sweden. They're going to be in Sweden and with their talks by another 90 days in Stockholm. That's also a big deal. And then, not to mention, you do have the FOMC meeting. So let's get into some topics, and then we'll keep going from there. First of all, what do we have looking on this week? We got a lot. We'll talk about earnings in a second, but the key events, we have consumer confidence on Tuesday. We have JOLTS on Tuesday. Last time that jumped 400,000, showing that the labor market was pretty strong, if you believe that those jobs are accurate. Then you have GDP on Wednesday. I think expectations are around that 2.7-ish%. So hopefully we get around 2.5 and above. Then you have the Fed meeting on Wednesday, where they're probably not going to cut rates, but at least they will hopefully give us an inclination for wanting to cut in August, which is a big deal. Then you have PCE on Thursday, and then you have the first jobs report going into the end of Friday, going into the end of the month on Friday, the July jobs report. So it's a big one. It's a big one. These are big events that we have going on. All of these can move the market. Obviously, the Fed meeting is going to be the most important. Again, probabilities are a 97% chance that we do not cut, 97.4 on July 30th. I mean, we do have a chance. It's 2.6. There is a chance. But September, we have a 60.5% chance of likely getting a cut. And I think the probabilities are going to go higher the more deals that we get. Remember, the more deals that we get, the less likely Jay Powell thinks there's going to be this massive tariff inflation. And so reducing rates on Cambodia and the Philippines and all these different countries, which by the end of August 1st, I would imagine we're going to make some progress on that. More likely than not, we're going to leave out a ton of deals. And as Lutnick was saying last week, as you get into the first couple weeks of August, he thinks we're going to be able to get some deals. But on August 1st, people will absolutely, it's like Cambodia will be paying 40% tariffs on August 1st. Now, we don't do a lot of trade with Cambodia, so it's not that big of a deal. But the point is, they will be paying those tariffs, and that's not good for rate cuts because at the end of the day, Jay Powell thinks tariffs are inflationary. But the more we get some of these deals done, like we got with the EU and Japan, and the less the tariff rate ends up becoming in aggregate, the better chance we have for Jay Powell to not feel that tariffs are inflationary, which, we don't even fully have all the data on if it's inflationary or not, but at least the perception of it will not be that bad. And maybe that'll get us the 2 rate cuts we need by the end of the year. 38.72 on Ethereum. And then you got Bitcoin right here, 119.4, trying to get back to 120. And then Ethereum at 4,000. So there we go. Now, in terms of earnings, what do we got? This is going to be a big week in regards to earnings as well. Take a look at this. Monday is not going to be too crazy. We have Waste Management, which is, I think, probably the biggest company out of everything we got. Tuesday, you got SoFi, PayPal, Spotify, UNH, Procter & Gamble, UPS, Merck, Royal Caribbean, JetBlue. I mean, you got a lot of stuff going on Tuesday. And then after hours, you have Starbucks, Visa, Marathon, Cheesecake Factory, Mondelez, Teladoc, EA Sports, Booking, Next Decade. You got a lot of stuff. And then Wednesday's the Super Bowl. Wednesday is the Super Bowl. You got a lot of stuff in the morning, Wingstop, Fiverr, Etsy, Altria, etc. After hours, you have Microsoft, Meta. You got Hoodie, which is a big one for me and a lot of people on the channel. Carvana, ARM, Qualcomm. You do have Grab as well at 8 p.m. You have APLD. You have Ford, VC Properties, eBay. You got a lot of stuff. And then on Thursday, you have Amazon, Apple, Coinbase, After Hours, Reddit, Roku, First Solar, MicroStrategy as well. In the morning, you have Roblox, MasterCard, Ferrari, Shell. I mean, there's just a lot of stuff. Most of the companies in the S&P 500, they're not all listed on this website right here, but most of them are reporting this week. So this is going to be the week that determines if the whole argument that everyone's been saying around earnings growth, right? Like, can we keep up earnings momentum and earnings growth? Is that real? And if it's not real, we are going to see some weakness in the broader markets. But what helps it become real is these trade deals. I mean, the more trade deals we get, the better chance there are to have some meaningful earnings inflections, especially in terms of what's guided by a lot of these companies, which so far, outside of a few select companies, a lot of companies have said tariffs are not that big of a deal, like a Delta, like a Levi's, et cetera. Now, some companies like Decker said they have been a big deal and they're going to be increasing prices. Walmart, Lowe's, and Home Depot, those are going to be the main ones. But if they can stomach some of those tariffs, especially if we get a decent deal with China coming up, I mean, there's a world in which this can get very exciting. This is a world in which this market can get very, very exciting. So yeah, 38% of that was the stat I was looking for. 38%, basically 40% of the market cap of the S&P is this week. And that is a lot of money that's going to be moving up or down. ETHA, that's the BlackRock ETF. We'll talk more about Ethereum because the inflows on BlackRock's ETF has been massive. That's up 7%. That's up 7% overnight. Ethereum looks like she wants 4,000. I mean, it looks like it's going to happen. Questions when, but she's definitely gearing up to make a run for that 4,000 level. All right, cool. Yes, also, Wednesday is Ethereum's 10th birthday. That is correct. I saw that headline this morning. So that could be, who knows, maybe a little bit of a birthday surprise on Ethereum if everyone comes together and buys a little bit on Wednesday. But the 10th anniversary of Ethereum will be on Wednesday. And that could also be something big that we look at as well. All right, so let's get into some of these topics and we'll go deeper from there. And talk about a variety of companies, expectations that I have on some of these companies and what we're looking at going into earnings. First, let's start off with some macro. This is a chart I think I showed last week. Actually, no, it's updated because when I showed it, it was 58 days above the 20-day moving average. This is the chart of the S&P 500 historical performance when it's 63 days above the 200-day moving average, which if everything holds up like it is in the overnight markets, it will likely be 64 days at the end of Monday. So this has happened 4 times in history: 1961, 1965, 1964, 1997, and 2025. So basically 5 times now in history. Every time 12 months later, you have a 10% on average gain on the S&P 500. 10% on average from here 12 months later, if we're at 640, would be basically 7,000. Now, 6 months later, it's up about 6%. 1 month, it's up 1.5. 3 months is up 4%. The point is, it's green every time we have stayed above 63 days, above the 200-day moving average or 20-day moving average for at least 63 days. The S&P 500 has not moved up 1% down or up in the past 22 days as well. So we have seen some really strong momentum on the broader markets and how they've been able to hold up. From a macro perspective, historically, it does seem like there is a lot of room, Palantir right there, 160.79, for the S&P to continue making its move. Even on Friday, it was only up 0.5%. So it's making these like 0.5% moves every other day. It's not really going up 1 or 2% all at once, which keeps it in line with some of the historical patterns we've seen. And if that continues this week with earnings, like if Microsoft's $250 billion away from becoming a $4 trillion company, imagine Microsoft crushes earnings. Like when we mean crush, we mean crush earnings, which they already crushed earnings last quarter with Azure growth. AWS was a little bit light, but Microsoft crushed. They got back to 35% growth. Imagine they do that. Do you think Microsoft goes up another 10%? I mean, it's not crazy to imagine at least 3 to 4%. And then what does that do to the S&P 500? And then Meta. I mean, Google crushed. I know everyone's concerned about Meta in regards to some of their margins because Meta's spending so much for talent. But what happens if Meta still delivers a bombastic quarter and then Meta heads back to 740? I mean, the S&P is going higher. These are the most important companies in the world that are a crucial part of the S&P 500. I believe the Mag 7 or the Mag 10 take up about 40% of the S&P 500 earnings in terms of the actual earnings growth. And so it's going to be very important to kind of see how they perform going into the end of the year. So it's going to be a huge week. And I think from a macro perspective, if all else works out in regards to rate cut expectations, along with these moving average staying above what they need to stay, then we're going to get some green. And now we had Mike Wilson and Evercore ISI come out last week, and they said, hey, we think the next move for the S&P 500 is 5 to 10% down. I really respect those guys. Evercore, Julian Emanuel, I think I showed the clip on Friday. I respect him a lot as well. Zocold says this bull market will last through 2026. I mean, dude, I feel like there's a world this bull market lasts for the next couple of years. That doesn't mean that 2026 and 2027, 2028 won't have some hiccups, because there's always some hiccups. We had the hiccups in April in regards to tariffs. But dude, like for 5% down on the S&P, 10% down on the S&P, what is the catalyst? I think Steve and I, we did a podcast, I think it was like 3 weeks ago, where we spent a good like hour and a half. It was on the Future Show talking about like what would be that catalyst. And the only argument we kind of came up with, and this is kind of the only argument that I think a lot of people have been coming up with, is valuation. Because yes, valuation is aggressive, but it's not valuation is aggressive to the point where it's a blow off the top 2021 type of valuation, aggressive valuation, because Google is still trading at 194. Google's not expensive. Nvidia is not expensive. If you believe in Nvidia's growth, they are absolutely not expensive. Apple is expensive, but then again, it's Apple, right? It's always going to have passive inflows. Meta is not expensive. Like these are not companies that are like Open Door. I don't know if that's expensive or not. I do know that's very memey. That's kind of frothy in the market. And maybe that's a bear case for that part of the market. But that's not a bear case for Nvidia. And quite frankly, we talked about it last week. A lot of the reports that we saw, particularly from Robinhood's chief brokerage officer, Steve Quirk, he said, we see our customers taking fund money that they have, $10, $20, $30,000 gambles, not multi-$100,000 gambles or multi-million-dollar gambles on these stocks, because they've already had such a good year in a lot of the other names. And I don't think that's a bear case. I think a lot of people want a dip, especially these fund managers, because they want their clients to load up. And that's not to say we can't have a 10%. I mean, no one's, a psychic. Obviously, anything could happen at any moment. Maybe the EU deal falls apart but in terms of just broadly speaking, if earnings are good and we're going to get rate cuts and we don't have massive amounts of inflation, and for all intended purposes, this labor market is not slowing down. I mean, on Friday or on Thursday, we got the jobless claims, 5th week in a row of low jobless claims compared to what was expected. We're at 221,000, which is just like not recessionary. I mean, where is the argument? I'm just trying to be very logical about it. Where is the underlying argument that people should be afraid about when it comes to the bear case? Oh, Figma goes public this week as well. Yes, Figma goes public. That's true. We'll talk a little bit about the Figma IPO, but that one goes public as well. Palantir is super expensive, so you can't say the market's not expensive. I'm not saying the market's not expensive. I think my entire point is the market, the S&P at 22 times earnings is very expensive. However, if the S&P is expensive, the question becomes, is there anything to justify it outside of pure euphoria? And I think that's where the Tom Lee argument starts to make a lot of sense, where it's that the reason the market's expensive is because you have earnings growth and you have companies that are because of this massive AI revolution that is, kind of not slowing down. And as a result of that, it makes you wonder, how expensive does the market need, or how low does the market need to be in terms of its level of expensiveness to the whole point, right? You're discounting the future growth that we're inevitably going to see coming from AI. And it just doesn't feel like it needs to be discounted to such an extent if the market continues holding up. This is what Tom Lee said also about some of the froth in the market on Friday. So let's get his perspective right here and why he thinks the market is expensive on a sort of traditional basis, but doesn't have to be that expensive if we continue having this earnings growth.
Large cap quality and portfolio is 35 of the best S&P names.
These are like Steph Curry 3-quarter shots.
Yeah, these are not granny shots. You know what? There's $7 trillion of cash on the sidelines, and retail investor sentiment, I think you have to really fracture it. I think the Robinhood community is bullish, but what I'd call the high net worth and the traditional equity investor is still pretty cautious. That's the heart of our universe of clients. So I'd say that speculative activity, it's kind of, those are such small examples that I would say it's way too early for me to say they're speculation. Because
such small examples. I mean, the high beta ETF has been hitting record highs almost every day. But we're not talking about garbage stocks.
But high beta as an ETF, if you look at that, it usually should lead in a bull market. So it's not unusual, just like momentum MTUM should lead. But the thing to keep in mind is that in 2021, when Goldman cites that data, people were speculative excess in these big Mag 7 and these large cap names.
AKA in 2021, people were speculating on Nvidia, Meta, Apple, Tesla, Google, etc. That's not happening right now because the average multiple on those, I think, is around 24, 25 times. Google's, if you go forward, is like 18 times. Like, speculation will be 30 to 35 plus on the Mag 7 names. That would be okay. Like, we're getting a little too aggressive because these are real companies. They need to grow. They need to put up the growth consistently. We are nowhere near that. And if we're nowhere near that, again, where is this massive euphoria on the most important companies that matter that would end up taking the market down if that euphoria dies away? That euphoria just isn't there.
Hardly any euphoria in those stocks.
What do you think?
I would agree. If you're talking about bubble at this point in time, it's not the S&P 500. Because if you're talking about bubble and saying S&P 500, you've never seen the late 90s. It's just not a fair comparison. The other thing is, what I hear bubble from a lot of people, it's people that miss the market and they're trying to overcompensate. The valuations for a lot of these big cap stocks, not even close to where they were in the 90s, and the fundamentals are so much better.
Yeah.
Are there parts where it is speculative? Sure. But in large cap space, no.
Well, because I didn't even use the word bubble.
Yeah, but
they didn't use the word bubble.
Yeah.
They're just pointing out the way that some of these trades and some of the activity has been a little nuts.
But if I were to define speculative excess as someone making an assertion that is not based on current fundamentals, but then believing that their view is correct, right? That's a speculative bubble. There's a speculative bubble that inflation is coming back. And there's a speculative bubble that we are on the precipice of a recession, because that is probably the most common conversation I have with clients. And every Zoom I've done with an institutional account, always 5 minutes in, someone's like, Tom, how come you're ignoring all the risks out there? Don't you realize we could already be in a recession? So I think there is speculative excess in the fact that we're in a recession.
And negativity.
Yes, just like there was a bubble of pessimism after GFC. Remember, from 2009 all the way through 2019, it was a bubble that another financial crisis was coming. It was a bubble of pessimism.
Tom.
And that's, that's where this gets very exciting. That's where this gets very exciting, because from 2009 to 2019, we were basically in a bull market. We had some ups and downs along the way, but it was essentially a secular bull market. And that was because everyone was so pissed off about 2008 and the S&P 500 literally collapsing 50%, that people felt, okay, we're going to be super careful of deploying any money, allocating any money to the broader markets, because what if it happens again? We just had COVID 5 years ago, and that created a bit of fear, right, of allocating money just because some random event could happen and that could, take your money away. Then the markets rallied. And so people realized, okay, maybe they don't need to be that scared. Robinhood right there, 107.70, 107.47 Palantir, 160.78. And then you had 2022, where the impact of COVID was so much money printing that we just had a legit bubble because rates went to zero. But since late 2022, when we bottomed, we had something happen that changed all of our lives, which was AI. And that is what has created the level of productivity, level of margin expansion, which we're seeing in earnings, by the way. You're already seeing the types of ROI that people have been looking for the past couple of years starting to show up in some of these earnings. And we're starting to see some of the growth. Anthropic, one of the foundation models that is the creator of Claude, they are raising at $150 billion. Why? Because A, there's a lot of investor demand to get exposure to AI. B, they need more money because they need to buy more GPUs and they need to keep doing what they're doing in regards to growing as fast as they're growing, because OpenAI, Grok, et cetera, these guys are also raising a ton of money as well. And in fact, Anthropic had to take some money from the Middle East, and the CEO never wanted to take money from the Middle East, but now he kind of has to. So when you have something like AI enter the picture, that changes the dynamic. And then going to Tom Lee's point about a bubble of pessimism, what happened in April? Everything crashed. Retail smartly decided that, hey, we're not going to believe that the guy on The Apprentice is going to tariff Zimbabwe by 450%, and we're going to buy the dip. That ended up working. But that level of pessimism that Tom Lee's talking about, that still exists because fund managers are net not allocated to equities because they're afraid of whatever they're afraid about. Maybe inflation's coming back, as Tom Lee said. Maybe the tariffs are going to be too aggressive. Maybe we don't get enough deals, whatever it may be. As a result, that creates the wall of worry. That creates the ability to say, hey, maybe there is something to climb up. Maybe there are enough people that are bearish that you can be bullish. I mean, quite frankly, like, I know there's pockets of euphoria that even I've talked about, the Dogecoin treasury and everything we're seeing with pudgy penguins and all this stuff. But at its core, there are plenty of people that are out there that are bearish and that are calling a top. And I think we talked about it last week. If everyone's calling a top, is it a top? Because if it's not, then we got a lot more room to go. We got a lot more room to go, and it's going to be exciting to kind of see how this is playing out. Baby boomers with retirement cash, good distribution of money since people, investors, insiders, money on the sideline, resolution with tariffs, government favoring assets, etc. Yeah, I mean, those are, that comment right there are all the bull cases. You got crypto legislation that's going to unlock an entire new industry. Stable coins, that's going to unlock tons of demand for treasuries, which is good for our rates coming down, or at least our bond yields coming down. Then you have rate cuts, which seem to be inevitable at this point. Then you have tariff deals, which actually help the rate cuts become inevitable. And then you have baby boomers that have $80 trillion of wealth that are also going to be passing down that money. And that money is going to go to people that are more savvy in the equity markets and the crypto markets because they grew up with it. The Robinhood generation, and they're going to be investing. It's a perpetual bid that will exist on this market, at least if the earnings growth can keep matching it up. And from what we've seen so far, at least with financials and defensives, they've been great. Big tech, this is the week for big tech to really give us the juice. And if they can, then I think we're going higher. I mean, Google itself, search is not dead. It's growing 12% year over year. How is search dead? Now, Google's multiple is a different question. That's around market sentiment, but like that in and of itself, right? You would think AI would hurt one of these sectors. AI is only enhancing that sector. It's not hurting it at all. And, if Google's core business is still putting up growth, not to mention all the other AI initiatives they're working on, I mean, the next 5 years, dude, it just feels like it is going to be an incredible time to be an investor, not without its ups and downs, but the core directional argument seems to be bullish versus bearish. Palantir, by the way, 161. $161, folks. Palantir is a top 20 company in the United States of America. It's number 23 on this website right here because you have some of the European companies that are up there. But it is larger than Home Depot, Procter & Gamble, Bank of America, SAP, that's Europe's largest tech company, Samsung, Chevron, Novo Nordisk, Coca-Cola, General Electric. I mean, it's pretty incredible. It's pretty incredible. We talked a lot about Palantir on Palantir Weekly, so for anyone who wants to get more of my thoughts on that, you can. But look, I can't justify through the numbers. I haven't been able to justify through the numbers for a long time. I can say that she's a unicorn. The market believes in the future growth potential of Palantir. This company only has 800 customers. I'm not making a case for the stock being cheap, but I am making a case for the fact that the market believes they will grow. And if they don't grow, yeah, it's going to get hurt. But if they keep growing, it's up to the market on how much of a multiple they want to give it. And if they continue giving it a multiple because they continue believing into that growth story, then I think that's what you're going to see on Palantir. It's pretty incredible. Pretty incredible. That's what you got on Palantir, 160.93. S&P 500, 639. AMD, 169.16. SOFI, 21.49. Tesla right there at 320. Grab up a little bit, 539. And then you got Google, 194.45. Hoodie, trying to get back to 108. We'll see what Hood can do. on these earnings as well. All right, so let's talk a little bit of fintech, Hood and SoFi, and go deeper from there. First of all, on SoFi, let's do a poll right here. How are people thinking about SoFi? Put in the chat if you are heavy into SoFi. I know a lot of people are. 65% of you, by the way, said the market does not fade this deal. Let's do this as the poll. SoFi after earnings. Let's do below 20, 20, 22, or 25 plus. What do we think? Below 20, 20, 22, or 25 plus. This is the first earnings for SoFi that they're going to have that doesn't have that has a major run up. The stock's gone from basically 13 to 20. So this is one of the first major run ups you've seen on SoFi. First time it hit 21 in 3 years. I think Noto delivering the goods is going to be enough for SoFi to do what it needs to do. The question is, can they deliver? Estimates, 804 million and 6 cents of EPS. 804 million, 6 cents of EPS. 33% of you say 25 plus. 28% say 22. And wow, 28% of you actually say below 20. I don't see below 20. I mean, that could happen. I think that would be SoFi being typical SoFi. I don't think Noto is going to not triple beat. So I think he's going to massively crush when it comes to overall expectations. The question is, does the market get excited about it? I don't think there's going to be some massive AWS of fintech growth or technology platform growth. I think it's just going to be a solid quarter. And as long as it's a solid quarter, I feel like the stock has been re-rated primarily for the expectation of rate cuts, which everyone knows is going to be bullish. Maybe it doesn't have to jump to 25, but I would be very surprised if it goes below 20. Like, especially because it hasn't seen below 20 in a while. I mean, I think I got there one day, like on like Tuesday for like 2 seconds or something, but I think it holds up. I think it can hold up. Pound right here, 160.99, and then Tesla 320.80. The other thing about SoFi that's really important is that, look, if they can beat on that 6 cents of EPS, then I think that's also going to be very exciting because, so far they are profitable, but they're not massively profitable. And that's because their operating leverage is just not that good. If their operating leverage can get a lot better, then I think this is going to be a lot more exciting. And that's just the question of if Noto can deliver that going into Q2. Matthew has 11,000 shares at $7. Wow, not bad. A lot of people here. John has 500 shares. A couple, you have 3,000 shares. There's a lot of people. Curtis has 10,000 shares, 50 leaps. Yeah, a lot of people have. So I have SoFi leaps. I mean, a lot of people have leaps as well. So below 20 would kind of mess up a lot of our leaps, but I think it'll be able to hold up. I think it will hold up. All right, so that's what we got on SoFi. SoFi right there, 21.48. Again, Tuesday we will get all the answers. I'm pretty sure Noto's going to crush it. I just hope the market doesn't do a typical SoFi pump and dump as they usually do. And I don't think they need to now because you got rate cuts along the corner, and that if that comes in, that should help the earnings. In terms of Robinhood, this is going to be a big one. Wednesday is going to be a big day. I will be in New York City, so my presence on the earnings call on the live stream is going to be a little weird because I'm still going to be streaming it, but I'm going to need to find a spot in New York City where I can stream. I can't tell you guys why I'm going to be in New York yet, but you guys will find out that day. And so far, I have nowhere to stream the earnings call. So I might have to just find a spot outside and hook up my hotspot and stream from the street. It's going to be a pretty exciting version of me streaming. Again, you'll find out why I have to be in New York on Wednesday. But yeah, given New York is New York and everyone's doing crazy shit anyway, I don't think anyone's going to care that I'm hooked up with my computer on the street. But we're going to find out. We're going to see what we can do. No, I can't go to Steve's house, unfortunately. Steve lives still far from the city. I do have friends in New York, but the problem is I need to be at a certain location at a certain point of time. And if I go to my friend's house to stream, it's going to be way too far to make the other location I need to be at. So you're either going to see me walking down the street of New York or hooked up to some computer. There's no coffee shops where you can actually stream from because New York's so small. So I don't know. We'll figure it out. But it will be an exciting day on Wednesday. I think 90 is max pain. I think 120 is possible if they smash. That would be a little bit above that 113 high they got to 2 weeks ago. It could be flat at 105, but I don't think it's going to stay flat. I think it's either going to go down or up. I think it's going to be very hard to keep it flat. I mean, it was kind of down to flattish last time. It went to 44 after peaking at 52. So I think there will be a move. Here are the catalysts coming up. You got Robinhood Banking launching. in September. You have a new active trader event in Vegas in September. You have the expansion of tokenization in the EU. You have rate cuts, obviously, that are important. Credit card will be expanding. Singapore expansion by the end of 2025. Staking for ETH is now on the platform. The WonderFi Canadian acquisition is official. Bitstamp is going to finally be incorporated into the business. Cortex, their AI product, is rolling out. Mortgages, Robinhood's been testing that with a bunch of different products, and then potential S&P inclusion. So you have plenty of things that are happening. I'm not going to CNBC, I promise. I'm not going to CNBC. It's not that. You guys will find out on Wednesday, but it's not CNBC. But there's a lot of stuff. There's a lot. I don't think the market's gonna, a lot of comments I'm starting to see on Robinhood from like the FinTwit community are overvalued, too expensive, yada yada yada. And I'm just like, I don't know if you guys are seeing the same catalyst I'm seeing, because for a growth stock to maintain momentum, it needs catalysts and it needs the perception of growth, and then it needs to deliver the growth. And I think Robinhood will deliver the growth. The question is, are there enough catalysts to make the market feel, oh, this is going to happen, this is going to happen, this is going to happen? And I think the answer to that question is like, yes, like definitively yes. And because there's so many different things coming up for Hoodie, as long as Vlad gives us the growth, I think we're going to 120. Now, I don't know if it happens on this earnings. I do think by the end of the year, 120 is very possible, even without S&P inclusion. With it, I think it's very possible. But we got to get the goods from Vlad on Wednesday. We got to get the goods from Vlad. Wow, Palantir, 161.48. Dude. she might be getting ready to go to 162. It's not Bloomberg either. I would just tell you guys, there's no point to keep it a surprise if I'm going to Bloomberg or CNBC. I already did Bloomberg, right? So it's not like it would be a surprise, but it's something else that you guys will see. But I need to be in New York. And I was telling Tanner, I was like, dude, I don't know how I'm going to stream this, but we're going to have to find a way to stream this. Dude, 160. I mean, is she really just going to go to $1 trillion? Is she really just going to walk herself to $1 trillion? Is Dan Ives right? He said $1 trillion in 2 years. Is he right? Like, my goodness, momentum is there. And the dip now, I mean, if it fell to 140, that would be a little nasty, right? 160 to 140, but like at 140, I think we all still understand it's expensive. Just on a pure metric basis in regards to their growth. So the question then becomes, does that dip get bought at 140? And if it does, if you're long, I don't think you could be that upset if the dip gets bought at 130 or 140, because it's like, all right, if that's the floor, I'll take that. But for those saying, it has to go back to 60, 70, 80, it is possible. I just think it is highly unlikely. At that point, it would be a 60 to 70% decline, bro. That would just be aggressive. Again, it's expensive. It is indeed expensive. We again, I'm not going to go deep into it, but on Palantir Weekly, listen to the conversation we had about valuation. Expensive. Arnie, Matt, and myself, I think we all gave hopefully a valuable perspective on how to think of this, especially if it is a heavy part of your portfolio. But I don't know if we're ever going to find a story like this. Again, the main reason for this, I think, is because of Piper Sandler. They initiated a coverage and a price target of 170. On CNBC on Friday after hours, they said, after doing our research on Palantir, we concluded that this is not a meme. This is a real business. And it's crazy because it's like, wait a second. At $7, retail understood it was a real business. And now Piper Sandler at a $350 billion market cap is telling their clients that, hey, it's a real business. And that's good for anyone who bought at $7, because you sit back and let people with the big pockets bid it up as they now believe in the story. I mean, it's just one of those stories that, again, I don't think it's just dumb retail money chasing it. Is there some of that is jumping into it at 150, 160? They don't care about the price. They're just buying it for the hell of it. Sure. But I really do think this is a phenomenon where the street is recognizing we cannot fade this story. We cannot fade this management team. We cannot fade their growth prospects. And if they deliver the growth, then we have to be in the name. And for people that are underallocated into equities, particularly fund managers that might not want to get exposure to other AI names, there you go. You got Palantir there. That ends up really getting that bid. So, yes, breaking. Palantir is not a meme. There you go. 161.49 on Palantir. All right, so we talked about Hood. We talked about SoFi and some of those expectations. Let's look at some other general headlines we got going on. So this came out yesterday, and I thought this was pretty interesting. Meta's new AI organization, Meta Superintelligence Labs, now oversees 3,400 in staff. And I think a lot of those 3,400 are researchers as well. One of the researchers being this guy, whose name I'm not going to say because I I embarrass myself enough with pronouncing things. He is, Alexander Wang posted, he is a brilliant scientist who most recently pioneered a new scaling paradigm in his research. He will lead our scientific direction for our team. The guy in the white shirt is the new guy they poached from OpenAI, who was integral to coming up with the reasoning models of GPT-4. I mean, look at those three guys just hanging out. Like all three of them knowing they're about to try to achieve super intelligence. I mean, it is incredible, dude. I don't know how much Meta gave him. I would imagine it has to be upwards of $500 million minimum to come to Meta and leave OpenAI. But he left. And the fact that he left and he's working with Zucks. I mean, look at Zucks. Look how happy he is. Look at him smiling. Zucks is like, yeah, we're going to take over the world. Like, he just knows it. He just knows it. It is absolutely incredible to see what is happening in the AI markets. And as a result of that, you got a lot of AI names that are getting bid up. Now, Meta on their earnings, I think Zucks is going to have to explain exactly how much they're spending and if it's actually going to affect their margins, if it's kind of like a metaverse moment where they're going to need to spend now to benefit later. But I think investors are not going to care. I think they're going to tell him to keep spending more, because if he genuinely is about to build real super intelligence, I don't own Meta, but let me know in the chat for anyone that does own Meta. If he genuinely is going to build super intelligence at the scale that he's going for, I mean, we're going higher. We're going higher. Like I personally think the more and more I think about it, we are all underestimating how unbelievably large the impact is going to be of AI on our lives. And we still don't have agents yet. By the way, I got access to Perplexity's Comet, their browser. I haven't played with it too much, but it's pretty cool, dude. It's pretty cool from an agentic perspective. And maybe I'll do a video later just like showcasing all the different things you can do on Comet. But you can literally upload a YouTube video. And like, as a YouTuber, there's a bunch of different steps you have to do: a thumbnail, title, blah, 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 all this stuff. You can just prompt it, be like, hey, do all the things that are necessary to make sure this video goes public, schedule it for 5:30, and then just leave your computer and it'll just do everything, because it's an agent. And the AI is getting good enough where it can understand the natural language of my prompt of, hey, do this, do this, do that. And then it just does it. Now, I imagine Google's going to come out with something like that pretty soon, but Google doesn't have anything like that yet. Like YouTube is owned by Google, and I can't go inside of Google Chrome and then prompt an agent to then tell Google that owns YouTube how to automatically upload my YouTube video by filling out all the logistical things you have to fill out for a video to go live. On Perplexity, you can. And if Google does do that, I haven't seen it. They haven't done a great job marketing it to me. But the point is, like, this stuff is coming. This stuff is coming pretty soon. And I think it's going to be coming at a rapid level across every industry. And when it does, I think we're going to see a lot more momentum. Now, I haven't tried to do it on Perplexity yet. I haven't tried to like get them to upload my YouTube video. I've seen people post like demos of them doing it with their Perplexity browser. And I was just looking at this thing and I was like, dude, this will save me a lot of time. Like, I haven't tried it yet, but I'm like, dude, if I like commit to something like that, that's like, I don't want to pay $200 a month for it. But like, the point is, it would save you a lot of time if this agent could just do everything for you. And then I imagine that in every part of our life. Obviously, Siri is, supposed to be the manifestation of that, and hopefully we get updates on that going into 2026. But it's going to take a lot of computing power, and it is not slowing down, and it should make all of us more productive. I mean, even today. So I finished up all the furniture that I needed to buy for the apartment. So got that done today. And while I was driving with my mom to the furniture store, turned on FSD and just started talking about a bunch of different things we needed to talk about to confirm the furniture. And again, the productivity of just being able to sit and talk to my mom to make sure we could confirm all the furniture that's needed and all the different designs we had in mind, while not having to worry about taking this exit or making this left turn. It is like, until you experience it, it's unbelievable. It's unfreaking believable. And that's just FSD, right? Like I can only imagine, all right, while I'm driving, I have more freedom to think. When I'm working in my day-to-day life in different workflows, if I had more freedom to just do different things without worrying about the consequences of paying attention to all the little minute stuff, I think that's very exciting as well. So the question is just, where does that play out over the next year? And I think that it will play out to the upside, and that is more bullish for the equity markets. Now, take a look at this chart right here. The S&P 500 is up about 8.6% year to date. This is about average, but with markets, there is no such thing as average. Only 4 of the past 75 years have stocks gained between 8 to 10%. 1958, 1964, 2002 or 2004, and then 2016. So Although the average on the S&P is around like that 9.2% or something, I think it's like 8.7%. We've only had 4 years since 1950 where the S&P was actually up between 8 and 10% to end out the year. The odds of us staying between 8 and 10% seems unlikely if it's only happened 4 times. Oh, I wasn't even showing the chart. Sorry. Here's the chart. If that has only happened 4 times in the past 74 years, which either means we go down below 8.4%, or we probably go higher than 10%. And I think the risk is that we go higher if we've only stayed between 8 and 10% 4 times in 74 years. Got more momentum. Do you guys think about driving when you drive? That's a good question. Do you guys think about driving when you drive? I drove an ICE car for 5 years, right? So I drove a lot. I put like almost 70,000 miles on my old car. So, I mean, I got used to driving and just going through the motions without actually thinking about driving. However, I will still stand by the fact that when you don't actually have to worry about switching lanes and doing the things that are necessary to switch the lane, put on your turn signal, get ready to move to the next lane, look at the mirror. It's just, I don't know. It's different. It really is different. It's one of those things where it's like, I can just focus on the conversation I'm having or the thought that I'm having. I can't look at my phone because FSD will ding you if you look at something else, but it does feel more productive. And it feels like magic, bro, every time. Now my mom doesn't freak out anymore. I mean, she used to freak out the first couple times. Now she's just like, wow. She starts to trust the vehicle that it's going to do the right thing. In heavy traffic too, on a busy highway, like I give it up to the vehicle. Obviously I'm paying attention, but like it's able to do its thing. Tesla right there at 320 after going to 300 on those earnings last Thursday. So that applied to your entire workflow across, a variety of things that people are doing every day. I think we're just beginning. I think we are just beginning on how exciting this AI revolution can be. Yes, you cannot use your phone while using FSD. Trust me, I've tried. I've learned the hard way. You'll get banned for like a week. They'll give you a couple warnings, and then when you ignore their warnings, so you're like, stupid machine, I'll do whatever I want. Then they'll be like, all right, cool, you're banned for a week. And then you get banned for a week, and then you just have to deal with it. So eventually, unsupervised FSD will be the game changer, but that's not here yet. Eventually, we'll get there, but when it is, I think it'll be very exciting. But still, even though you can't look at your phone, you can think I know it sounds cheesy, like, oh, you can think, but like there is a difference when you experience a long drive with being able to just purely think and be productive from like thinking about some future business meeting or whatever you're going to get into versus having to pay attention on all the different random stuff that it takes when it comes to driving. Okay, I have not used the sunglasses trick yet. I have not used that yet. People have said that. I've not used it yet. But I'm probably going to eventually try to do that. That's a good idea. It's not a horrible idea. It's not safe though, so I wouldn't recommend doing it. Like for those moments where you really do got to check your phone, like having some sunglasses just so it doesn't kill you for looking at the phone. Like, dude, literally you'll try to change the music on your phone and it'll get mad. I'm like, I'm not even checking my Twitter. I'm not checking messages. I'm just trying to change the song, bro. It's like, nope, pay attention. So there you go. All right. So we talked about hoodie. We talked about SOFI. Again, my take on SOFI, I think it'll do well. I don't know if it breaks 25, but I think if there was any quarter where it does break 25, I think this would be the quarter. I think Noto will pull up the results. And then the question will be, can the market maintain the momentum after Noto puts up those results based on the expectation of rate cuts? So I think SOFI will be fine. I think hoodie, I'm going for pump, dude. I'm going for pump on hoodie. I think it'll do good. I don't know if it's 120 good, but I think it will be good. And so I'm not too worried about hood. Maybe I am being a little bit too conservative in my estimates for earnings. I have them at like 118 or 917 million. Street's expecting 913. If they come in anywhere near 930, 940, then that will also be very, very bullish as well. Grab is on Wednesday as well. We'll talk about Grab. I will not be live for Grab because I will be in New York. So unfortunately, I will not be able to stream Grab, but we will talk about it. I'll probably post on Twitter as soon as the results come out. And see what it is. Grab, I don't know, dude. It's already run up a decent chunk going into earnings from 450 to 540. I think they have a quarter where they smash. The only way I see this stock breaking $6, which would be just massive for it to break $6. And it's got close. It got to 590 after hours one day. I mean, like we've seen these spoofs of it going up and down and like really getting momentum. is if they raise their adjusted EBITDA. And I think they will raise their adjusted EBITDA closer to 500 million. If they don't do it this quarter, then maybe they're going to wait till Q3. But if they do that, the market's going to know, holy crap, they're really starting to see some earnings inflection. So I think it'll be a phenomenal earnings. It just might be the quarter where they raise guidance to such an extent that Grab really has room to move higher. And if it doesn't, that's okay. I will keep accumulating. I have been buying a lot of shares. I've been buying in this 520 to 550 range. I just to me, it's kind of safe because I think it's de-risked. I don't think we're going back below 5. And if we do, I'll buy more. It's still trading at 40% cash. It's cheaper than a lot of other growth names. And so to me, it's a name that I have a lot of conviction in and that I don't feel worried about buying in this range. So we're going to see with Grab on Wednesday. I have not bought Ethereum yet. Honestly, I've been buying more Grab than Ethereum, to be honest. I've been buying a lot more Grab. When I do buy Ethereum, I probably will buy it through the BlackRock fund. I do have a little bit of BM&R. I also think HOOD is kind of my exposure to Ethereum. It's kind of like having a lot of HOOD. If Ethereum does well, HOOD should do well as well. But I probably will buy BlackRock's ETF to get more. Where's HIMS overnight as well? We didn't look at this. This one had a FDA headline on Friday. HIMS right here is up about 2%. I still have my 700 shares, average is 55.85 on HIMS. The FDA put out some notice that compounded GLP drugs will be banned, or they're gonna have to go through more regulatory checks, and that took HIMS down to 55, 6% in 2 minutes, and then it recovered. So the market cared, and then the market didn't care, but that is one of the headlines that we have to see going forward with HIMS. So there we go. Oh yes, I forgot to say this last week. Grab was raised by DBS Group to 635 from 568, so it did get a price target above 6. Evercore also has them at $8. You got a decent chunk of analysts that are in that $6 to $8 range. They just got to put up the earnings, and I think given what we've seen in terms of call option volume and overall buying activity, and then general regional consolidation that we talked about, that should get them there. Last thing on Grab real quick. I made a thread on Twitter for those that are really curious about it, but go to the company they were going to buy out in Indonesia. The TLDR, that company got caught in a fraud, stealing $600 million worth of Google Chromebooks that the government gave them to give to poor children in Indonesia. And that company is now under massive investigation. So I just put the link in the chat. You can read all the DD I put in there about this. But the TLDR is that company engaging in fraud, Indonesian government's not happy about it. They might tell Grab to just swoop them up and take that company under their wing instead of having to pay the $7 to $8 billion that we would have to pay if we get to pay $1 billion or less than $1 billion. I mean, dude, that's a really big acquisition because GoTo is still a massive company. It's just unfortunately being led by some crooks at this point. And thank goodness we didn't buy them before this came out, because there were rumors that we were going to buy them before. And this shows me Grab's management team is pretty damn sophisticated to just take their time, be patient, and not do anything stupid like overpay for a company that was engaging in fraud. And we might get them for the cheap. And if we do, I think that could be very big for Grab as well. Okay, cool. So what else do we have on the overnight markets? Google right here, that's up about 0.5%. Meta right there, up almost 1%. Tesla up 1.4. That's 320. Apple up 0.38. S&P 500 again, basically touching 640. Palantir 161.58 on Palantir. Bitcoin trying to get back to 120. And then you got the S&P at 630 or 639, which is also trying to get around to 640. Here is what Mr. Lutnick said today on Fox News, talking more about the tariffs and tariff revenues. We'll take a look at this, and then we'll keep going from there.
So the tariff revenues are amazing, right? $700 billion a year. That's just net new money the government never had before. So you take that every year for 10 years, that's $7 trillion. And then what they're not counting is the way the president is smashing open these markets. You got every market, right? Japan, Indonesia, Vietnam, you name the deal he does, and he opens that market. That's going to have export growth, right? Never before has our ag and our industrials actually had access to these markets. We're meeting later today with the European Union. The president's goal, get those markets open for Americans to export to them. And that growth is going to pay for everything. It makes Americans richer. And of course, our tax revenues go up the right way by Americans making more money by winning in business. So
Now, this is a little bit more of Trump talking about the deal with the European Union.
Basically, we're not invited. We're not, I don't know if the word is not allowed or just, you just kept them out somehow, right? But cars will be, we have some cars that do terrific business and we do really well with the pickup trucks, with the SUVs. We have some great things. And I think the people of Europe will have some diversification. I think that'll make them happy. So I think maybe cars would be the one that would go the biggest. And the second would be agriculture, the farmers. And we'll do it in very strict conjunction with the president and the European Union. And they're coming into our country with great vigor. And I think they're going to make a lot of money with this. I think everybody is. I think and again, it's going to bring a lot of unity and friendship. It's going to work out really well.
I mean, look, it seems like this is going to be a good deal. Here's a little bit more of a funny moment with Trump and the European Union president.
You're known as a tough negotiator and deal maker. What is in front? And fair. And what is in front of us?
That's less important.
If we are successful, I think it would be the biggest deal each of us has ever struck. So I'm very much looking forward.
Ever struck by anybody? That's true.
Yeah.
That's true. Right now, we have that honor goes to Japan. We just struck a deal with Japan, as you know. And we're very close to a deal with China. We really sort of made a deal with China, but we'll see how that goes. And we have numerous other deals. And mostly I'm just going to charge tariffs. And, it's not a deal per se, but people are going to pay tariffs. And we're doing them at the low end, not the high end, because we don't want to hurt anybody. And pretty well, but you and I both figured this is really the biggest trading partnership in the world. So we should give it a shot, right?
Yeah. Very much looking forward to that.
Oh, thank you very much. I do too.
You're known.
Looks like it's in, folks. It looks like it's in. Now, the implications of this we will find out over the coming months. But, dude, it looks like we got this done. It really does. And you got to give credit where credit is due. I think I personally have been fair on critiquing Trump on stuff that I think is worth critiquing. And I also think I've been fair on giving him credit where credit is due. And ultimately, if they got a deal done with the European Union at a level in which the European Union is going to be buying damn near worth $1 trillion of energy, you got to give it up to the deal-making process around that and say that, okay, that could be something bullish. And we're going to see how this plays out. Now, okay, so Raj says, amid how is this not a tax on Americans? Obviously, yes, there is a world in which prices of goods and services can go up if you kind of follow the economic theory of tariffs being put onto the consumer. That is possible. The question then becomes, what offsets it? Does the tariff revenue offset it? Does the tax cuts that we got in the big, beautiful bill offset it? Does the overall economic mobility and business capital spending environment, for example, if the Europeans and the Indonesians and the Chinese, et cetera, opened up different parts of the market that were not opened up to the United States, does that create more economic movement in general? So that even though there is a quote unquote tax on the American consumer via these tariffs, there's still net business activity happening, which is overall good for the economy. I mean, I think there's a lot of different nuances to it, and I by no means know exactly how it's going to play out, but I'm here to kind of think about what the market thinks will happen. And if the market were to think that a 15% tariff on autos, for example, is going to make cars so expensive that people are not going to buy cars in the United States anymore, we would not have the S&P 500 at all-time highs. Remember, the market priced in 10 to 15% tariffs across the board in April, across the board. And for those 4 minutes, it wasn't even 4 minutes, it was probably like 40 seconds, on April 2nd, before they brought out that big board with all the reciprocal tariffs, when Trump said 10 to 15%, everything went up. Everything. I mean, it was quite. I think the S&P was up like 2% overnight. It was amazing. And then they introduced all the reciprocal tariffs, and then down we went. So the market was ready for 10 to 15%. The market was ready for 10 to 15% back in November, because they knew that's what Trump was going to run on. It's just kind of Trump took us all for the ride of a century in terms of going up and down in terms of what the tariffs would look like. And now we're here. And now we're here with deals. But to your point, and to this comment right here, yes, the market is not the economy. That is correct. And having said that, let's bring up this chart that I want to show everybody. Buy now, pay later. Annual buy now, pay later transaction volume is expected to reach a record 116.7 billion in 2025. That would be double the 2022 total and 7 times higher than 2020. BNPL use is exploding as consumers are increasingly searching for ways to borrow for spending. A Lending Tree survey showed that 25% of users now rely on BNPL to buy groceries, up from 14% last year. Almost 25% of BNPL users missed at least one payment in 2025, up from 15% in 2021, according to Fed data. I think we saw a stat on Klarna a month ago that was like people are using BNPL. They're using Klarna to buy Coachella tickets, which is a bit ridiculous. And then there was another one of people using Klarna to buy DoorDash, which is also like, I mean, you know, the BNPL $25. That is a bit of an issue in regards to the broader economy. So look, people with assets and people that are analyzing things in the context of having assets, that market and that analysis from like the concept of tariffs is different from the economy. Now, the market is pricing in that the tariffs are not going to be that bad for the economy, which is why we're seeing markets generally say we can overlook this. But you can't deny that there absolutely are consumers that are struggling. And the consumers that are struggling in a profound way. I mean, I've never used BNPL. I have a credit card, obviously, that I pay off at the end of the month. Like for my furniture today, I finance my furniture 0% for 12 months, and that to me just makes sense. If someone's going to not charge you interest for a year, then you can make a monthly payment versus paying thousands of dollars all right now. But BNPL takes it a step further, right? When you're talking about your average local goods like groceries every single day, having to buy now and pay that later. I mean, that's a different type of mentality. It's definitely a different type of mentality, and there's definitely a different type of consumer. And I think that goes forward, that sort of continues to make this argument that we've been talking about for a while, which is that there are different people in this market environment that essentially breaks down to two types of consumers. The types of consumers that have assets and are winning and have seen their net worth continue to go higher, and the types of consumers that don't have assets. And if you don't have assets, inflation's probably hurting, and the market, you know, going up or down has zero relevance to you because you don't own any part of the market, real estate, crypto, any of that stuff. If you have assets, it's been an incredible 5 years, and April was incredible because it gave you one of the greatest dip buying opportunities ever. By the way, this BNPL data is similar to the credit card data I think I showed last week, and the auto loan data that I showed 3 weeks ago, which is not good. The auto loan data, I think the stat was the highest amount of people in the past like 30 years that have missed an auto payment have now missed the payment in 2025. Like, that's not, you know, that's not healthy for us trying to pay our bills. And then credit card APRs are at the highest levels ever as well, as companies are trying to protect against their downside for lending out money. So yeah, that is an issue. Now, what's the resolution to that issue? I mean, I don't know. All I know is that if you own assets, you kind of want to continue to gain exposure to assets. The crazy part about this is if the real economy breaks, then assets eventually will break. Like, you don't have a world where these stocks can maintain these valuations if there's like real fundamental problems in the economy. But then every time we look at this BNPL, auto loan, credit card data charts, it's bearish. But then we look at the labor market and it's bullish. Jolt says we have 8 million jobs open. Non-farm payrolls come in 30,000, beating expectations. Like, so it's kind of hard to get a conclusive understanding of, are real people struggling to such an extent that the entire economy is screwed, or is it a real segment of the population that is not necessarily the worst thing for, you know, the broader economy? And I don't think we fully exactly have the answers to how that plays out. Here's a good clip that I saw this weekend on the Compound and Friends talking about U.S. wealth levels over time and how that has started to increase, but also kind of stay the same at the same time.
Chart real quick because I think this is important. So
throw it up.
This is the snapshots of wealth over time from the Survey of Consumer Finances, the Federal Reserve. I've broken this into the levels, right? So the level 1, less than 10K, level 2, etc. And what you can see, that bottom dark blue in level 4, that's the big story here, which is in 1989, which is the first bar, it was 7% of US households. And by the way, this is inflation adjusted wealth. So this has already been adjusted for inflation. In 1989, that's 7% of households. Today, it's 18% of households.
The stock market?
It's stock market, home prices, a lot of different things have contributed to that. There's just more wealth than ever before,
I think
right?
it's not just stock market, though. It's compensation.
Home equity, compensation.
But also
Compensation
level 1
being
is
in stock market
level 1 is
form.
shrinking.
Yeah, level 1 was 25%. Now it's about 20%. So that, like, the poorest part of society is much smaller. And this is, once again, this is inflation adjusted wealth. And so those are shrinking, and there's more, you know, in the upper middle classes, I call it 1 to 10 million, which is supposed to be location agnostic. Obviously, if you have like $8 million and you're in Alabama, you're definitely upper class. But like I was trying to say, even in New York City, like I'm trying to be location agnostic here. I think this is the big story here, because there's more people in that bottom bucket, and that's creating a lot of competition for these resources. I wrote about this recently.
And for stocks.
Yeah, I mean, for stocks, I mean, house prices, you know, as I said, the Amex Lounge is overrun right now. It's crazy. Like you go, there's lines to get in there. There's more people with these cards than ever before. I think the upper middle class is going through an existential crisis, and I think we're going to see this play out over the next few years.
Right. The system is not built for this much affluence, this many people experiencing affluence. Everything is buckling. There are no more VIP experiences because everyone's a VIP.
It's turned the travel rewards and the credit card rewards business on its head. If you watch what the airlines are doing with reward points, it's not what it's worth.
On the Amex call, all they asked about, they're like, sorry to keep belaboring the point, but it was all about competition with cards and rewards.
Yep, it's a new game.
Agreed. All right.
It's interesting, right? There's so much wealth that's out there. And that clip, to me, that is the explanation on Open Door. That is the explanation on Open Door. There is so much money that is out there that some people are like, screw it, I'm going to gamble on Open Door. Screw it, I'm going to gamble on Krispy Kreme. Right? I mean, like, there's probably some people that are like YOLOing their life savings, hoping that it can go to the moon. And then there's other people that are saying, dude, I have enough cash where if I lose this, I'm not going to feel that bad. I'm going to throw $5,000-$10,000 at it and see what happens. And so the rich are getting richer, and the poor are getting poorer, and it's just that simple. And the differentiating variable between both are assets. That's it. Assets have been the story over the past 5 years. The more assets you have, the more you can borrow against those assets so that you never have to sell those assets. I mean, think about NVIDIA. If you've owned NVIDIA for the past 5 years, even NVIDIA for the past 5 months, because Mr. Market gave us NVIDIA at freaking $85 at one point. NVIDIA's appreciated very nicely, you know, more than 50% in the past 5 months, and obviously, you know, thousands of percent over the past 5 years. If you just held on to your NVIDIA and didn't sell it, the amount of leverage you have to use against that NVIDIA, which by the way, is a very cheap loan compared to a personal loan from a bank, because it's backed by NVIDIA, an asset that the bank's like, all right, NVIDIA is not going to go bankrupt, so we'll give you some money at 5-7%, which is way cheaper than a personal loan at 20%. And then you've been able to finance the rest of your life by paying off that loan at a cheap rate, maybe selling some NVIDIA as NVIDIA continues to go higher to be able to pay for those payments. It has been the ultimate way to really benefit in this economy over the past 5 years. And I think it will continue to be how the economy operates. I think the way this plays out over the next 5 years, if you have assets, you will win. If you don't, you lose. It's just going to play out like that, especially because we have another 4 years of Trump, right? So there's not really going to be any types of policies that are more wealth distributive in nature. I know when Kamala was running, there was the idea that, hey, we would put higher taxes on corporations and we would use some of that money to be able to fund different social programs. Maybe that happens in 2028 if a Democrat gets elected, but that's not happening for the next couple of years. In fact, you got the biggest tax cuts in history with the big, beautiful bill. So it's like, this is the time where you have to own assets. The next couple of years, crypto is about to explode. Financials are doing great. JP Morgan, Bank of America, they're increasing their dividend. They're doing buybacks. Meta, Google, Amazon, record earnings that they're probably going to put up over the next coming years as AI is the tailwind, record amounts of spending in the semiconductors because of AI as this massive opportunity. Like, this is the world where people continue to benefit off assets. And the sort of final point on this is that the youth, people that are 18, 20 years old, are growing up with this mentality, whether it's on Instagram or TikTok, they're being infiltrated with all these forms of media that are telling them owning assets is good. Like, taking a risk is good. And part of that is because, I mean, when you see a stock go from like 90 to 150, people think, oh, I should have bought it at 90, right? You don't have to be a rocket scientist to understand that basic argument that, hey, that's a way to make money if you buy low and sell high. But then B, if you have a lot of friends that are investing, you start to wonder, hey, what's this investing thing? And I think the more and more people that invest, I mean, I have so many stories of people that have told me that they told their friends about Palantir back in 2020, 2021, and those friends have changed their lives. And now those friends tell their friends about this concept of investing. Then you tell your parents. I mean, like, there's just more money that's going to enter into the equity markets. And you can't fight that. Not to mention, there are still $7 trillion freaking dollars on the sidelines. There was a very modest increase in money market funds last week. All $7 trillion doesn't need to leave. But again, on average, money market funds have $4 trillion. This has only been a 3 to 4 year phenomenon where we've seen above $4 trillion worth of money market funds, even if a couple $100 billion as rates come down, which they will come down, even if it's not this year, leave the money market funds. That's more money coming into equities. So it seems like there's reasons to be bullish. Yeah. And now crypto is, I mean, the United States is going to try to have world dominance when it comes to crypto as well. Now, again, that does not mean you just go out and spend everything and, you know, like, don't take a look at what it means to buy a stock, and you don't evaluate all the different fundamentals that come towards a stock. But net, being exposed to assets has worked this year. I mean, if you've been bearish this year, it has been gut wrenching because you thought you were right. Because we had a blow off the top in February, remember? And then everything came crashing down in April, and you thought you were right. And then you ended up being so unbelievably wrong. So wrong that it's got to be gut-wrenching to now even think of buying in this market because of the opportunity that existed a couple months ago. And I think if you're a bear, after all the arguments that I just pointed out, you kind of at some point agree with, all right, being net exposed is better than being short. And you end up biting the bullet and start buying. Even if you have to play, you know, some of these more expensive multiples. So there we go. That is what we got, folks. We will be back tomorrow on the market open. Overall, equities relatively green. NVIDIA right here, 174.80. Robinhood, 107.35. Palantir, 161.36. Absolutely incredible. S&P just shy of 640. Grab up a little bit, 541. Google, 194. SoFi, 21.48. And then AMD, 168.74. This is what we're looking at this week on earnings. It is going to be a big week. Let me know from all the names that you see right here, what is your heaviest position? We'll do that as we end out the stream. What is your heaviest position out of these names? You got Hoodie, Meta, Microsoft, Apple, Amazon, Reddit, Cloudflare, Ford, Teladoc, MasterCard, Altria, PayPal, Spotify, SoFi. I mean, you got a lot of names. I'm pretty sure a lot of you guys are heavier in one of the names versus the others. And so, you know, this week's earnings as an aggregate is really going to matter. Also, it's really nice that SoFi finally got some good news before earnings. Every time SoFi does earnings, there's some stupid macro news that drops the day before. This time you got the EU trade deal, and you got a China delay for 90 days with the United States. I mean, those are two really good pieces of news right before SoFi reports. And if Anthony Noto can deliver, I think that can be very good for SoFi. I think that could be pretty damn good. Got some micro strategies in the chat. We got Hoods and SoFis. We got Amazon and AMD. AMD, what day do they report? Are they this week? No, I think they're next week. Yeah, AMD is on the 5th. Okay, August 5th. AMD is on the 5th. All right, so AMD is next week, but still, that'll be an important one as well. We got some Googles, NVIDIA, Hood, Palantir. That's on August 4th. That'll be a big one. Got some Grabs, bunch of SoFis. All right, so all these names. Boeing, that's one this week as well. That'll be important. Dude, I got to show you guys something. Hold on, let me show you this. Boeing reminded me of this. I sent this to Chris as soon as I saw it, and I was like, bro, this is why, although it's an anomaly, this is why I don't freaking like going on cruises. It's for this reason. This is a real video that you guys are about to see. And the cruise lines have done great, but this is the stuff that makes me so afraid of going on cruises. Look at what happened on a Royal Caribbean cruise over the weekend. Wait, can you guys hear it? Where's the volume? Oh, there it is. Okay.
The latest on that Royal Caribbean cruise heading back to New Jersey this morning after getting caught in hurricane-force winds.
That ship is expected to return here tomorrow morning, so they wouldn't have to endure yet another storm. Some of the first-hand accounts from passengers are really quite terrifying.
Take a look at this new video. Rough seas ultimately causing the Royal Caribbean cruise ship to turn around. This morning.
Could you imagine being on this thing, bro? Could you imagine? Like, it legit feels like it looks like it's the Titanic.
The ship is on its way back to New Jersey after hurricane-force winds gusting over 100 miles per hour. And
no, it's not fake. It's not fake. This is real. I'm pretty sure this is real. It's not fake. This is real. Don't tell me I fell for this shit if it's fake. I'm pretty sure this is real. I sent it to Chris, and Chris was like, "Yeah, it's real." Dude, how is this fake? Okay, I'm gonna see if this is fake, but I don't think it's fake. I'm pretty sure this is real.
30 to 40-foot waves prevented it from making it to its final destination of the Bahamas. Passengers used cell phones to capture scenes that looked like they were right out of the Titanic. Flying furniture and shattered glass as massive waves pounded the anthem of the seas. The captain ordering the 4,500 passengers and 1,600 crew members to stay in their rooms for hours. Royal Caribbean apologized to passengers in a statement Monday, adding, "While the weather was unpleasant, the ship remained seaworthy at all times. We thank the captain and crew for guiding the ship safely back to better weather."
The cruise line is promising a full refund to all passengers and a 50% discount for a future cruise.
Okay, that is real. That is real. Because if I'm not wrong, I just found Royal Caribbean's apology, as they just said.
The CDC investigating a...
And I'm going to try to pull up the apology. Dude, how is it fake, bro? Why do these... See, we got to regulate AI. We got to regulate AI. How is it like, so the Royal Caribbean statement is fake too? Like, what the hell's like, dude, I'm such an unk if I'm falling for that. Okay, hold on. Some of those clips are not fake. Maybe they put it together for like a fake video for this specific moment. Oh shit, hold on. Is this... Okay, dude, I think it's from 2016. I think I found the statement, but it's from 2016. Okay, I'm definitely becoming old now. Okay. So so there was an actual moment where you had some really bad like wind and all this stuff hurting the cruise, but yeah, this exact statement that you heard on that TikTok video, yeah, it's from 2016. Okay, all right, I'm a boomer. I'm getting older. It is what it is, bro. It is what it, dude. I feel like I saw that. I sent it to Chris. I was like, bro, this is why I'm never going on a cruise. And then Chris was like, dude, I've been on one of those before. We had some bad waves, but like, it's okay. It's not that big of a deal. But I'm like, Chris, that looks like freaking the Titanic, bro. That's like scary. Like, what do you mean that's not that big of a deal? Granted, if it's AI, then maybe it's not exactly the Titanic. So there. Oh my gosh. They use footage. What is that TikTok, dude? Is that like some fake AI news account? See, we gotta regulate AI. This is ridiculous, bro. It's absolutely ridiculous. Hold on, let me go to this account. This is why you don't use TikTok for your news, bro. This is why you don't. Dude, the name of the account is called GG News. Yeah, everything here is fake. Everything here feels fake. Or at least over-exaggerated, I guess. Even if parts of it are real. See, they probably use VO3 to make some of the waves too, right? Well, anyway, I'm still afraid of, I mean, I've been on a cruise before, but like in general, I kind of like don't being like in the middle of the ocean stuck. But people do, and Carnival Cruises earnings were phenomenal, along with Royal Caribbean. All of them were up 3% on Friday. So I mean, like that. The reason I even brought that up in the first place is because we're talking about the health of the consumer. Consumer is good. Carnival Cruise, $30 overnight. That's up 1%. Royal Caribbean, that is up 0.5%, $354. I mean, the health of the consumer is strong. It's not going anywhere. People are ready to travel. People are ready to go on cruises. You're likely not going to see that much pain going into at least the end of the year when it comes to the consumer. Don't blame us boomers. Oh my gosh. No, I don't mean Chris Camillo. I mean Chris Patel. Christopher Patel. Breaking, AK Media in talks to buy a large stake in GG News. Dude, you do. I mean, like, honestly, I have to do a better job at that as well. Because even stuff on Twitter that I see, I'm like, oh, this is true. And then you look into it, like, this is not true, bro. This is all bullshit. But it's just like there's no regulations on posting stuff because it's all free speech, so you can post whatever you want. And so I think it's just verifying it many times. The good thing is I didn't fall for that Jay Powell fake letter. That one was just too obvious. That one's like, dude, there's no way he was resigning. However, last week, I mean, I don't know if you guys forgot about this, but the news moves so quick that I guess everyone forgets about it. But like, we did have this happen last week. We did have this happen. Like, the fact that happened last week, pretty incredible. I almost fell for the LeBron trade. Dude, I almost stopped the stream to say LeBron got traded to the Mavericks. I was like 2 seconds away from stopping the stream. And then I looked at the account and I was like, oh, this account has 5,000 followers. This is not a real account. LeBron might go to the Mavericks, though. It might be better than the Lakers. But yeah, this happened last week. This was the meme template. That legit was happening. Santa Claus is not real. Thank you. I did not. You know, I think I believed in Santa until I was like, I think until I was like 8 years old. I left, you know how I stopped believing Santa? I left the freaking cookies. And then I woke up and like the cookies were still there. I was like, this is bullshit. I thought you were supposed to eat the freaking cookies. Or at minimum, like I thought my mom was supposed to eat the cookies and make me think that like Santa ate the cookies. No one ate the damn cookies. I was like, all right. He doesn't want the cookies. He's fake then. Screw it. He's fake. So that's what we got. Anyway, even if that video was fake, dude, that's still one of my worst. Maybe the reason I was so quick to send it to Chris is because I was like, dude, this is why I don't like cruises. It was really confirmation bias for me. I was like, dude, just imagine being on a cruise and seeing these like 50-foot waves. I'm like, dude, I also love the Titanic. That's one of my favorite movies. So I think that compelled me to be afraid of cruise lines. My grandpa used to eat the cookies and told me they were good. Dude, we just dropped off my my grandparents to India, so they safely got back to India last night, which was like this morning for us. So yeah, stayed here for 2 months. They are now back home, and it was a good 2 months. It was a good 2 months. Yeah, we dropped them off at the airport yesterday. And the private jet? No, there's no private jet. Goodness. We didn't drop him off literally in India. We dropped him off to the airport that took them to India. But still, it was good. It was good. It was a good 2 months. Got to spend time with them. I think they really appreciated it. And another month, guys, and then we're moving out. Then we are moving out. And yeah, we got to do all the things that we got to do to move out. But I think a lot of things are done. Like furniture secured. Went to Walmart today. Picked up a lot of stuff. Dude, I got one of these. You know these? I don't think it's the Yeti or the Stanley. It just looks like one of those. But your boy is going to be hydrated constantly now. You know? You go to Walmart, you just have to buy whatever you... Dude, Walmart is like... Walmart and Target. Just makes you buy random stuff. But yeah, we got most of these things done. Does anyone have these bottles, bro? Like, I don't know what's the obsession with these bottles. They just look cool. And I see them everywhere. And I was like, screw it. I mean, it's not a Yeti. It's like a knockoff. I don't even know what the brand is. But it looks like one. And so, yeah. Women have them. Yes, women do have a lot more of them. I think people have them in the gym a lot more. I'm not a 16-year-old girl just for having these water bottles. Is it metal or plastic? I think it's more plastic than metal. I mean, there's parts of it that are metal, but it's more plastic than that. But Kaser says my daughter. Maybe it is something that girls have. But yeah, it is. I mean, I can't deny, bro. Whoever came up with this idea, this little handle for the cup, even if they don't do technical analysis, the cup and handle here is absolutely incredible, dude. And like, it really is nice to hold it. It's great to hold it like this. I mean, it's kind of an innovation. Whether it was Yeti or Stanley or whoever the hell's did it, it's great. It's great. So there you go. There you go. But yeah, dude, we're doing August 20th. I think it'll be official. The furniture is coming a couple of days before that, and then I think August 18th the internet's getting set up, and then the thing is though, I'm not gonna be in the apartment until like August 25th because we're doing Miami August 23rd. So Yeah, it'll take a couple days before I like legit get set up and start streaming. But towards the end of August, it'll be official. By the way, if you signed up for the Miami meetup, check your email. Check your email. The TLDR is we got a good location, but there are some steps you have to take in order to officially secure your name on the list because we got a lot of people that signed up and I need to kind of confirm everyone who's going. So please make sure to check your email if you signed up on the list for Miami. And yeah, August 23rd, we're doing it. I didn't get a black couch. It's like an off-white couch. You guys will see it in a couple weeks, but it's like an off-white couch, not a black couch. The Miami IPO is oversubscribed. Dude, no, like a lot of people signed up. And we just don't have the capacity for that many people. But, you know, whoever is coming, we will try to get everyone set up. So, should be fun. Toronto and Boston will probably happen again next year. We already did them this year. Next year, I really am trying to do Europe, though. Like a lot of places in Europe. So, yeah, the goal will be Germany, Italy. Dude, Iliano's in Italy right now, and they keep sending me all these pictures of them enjoying themselves. So I definitely want to go to see Arnie in Italy. We'll do a meetup there. And yeah, it'll be fun though, bro. It'll be fun because Miami, I haven't been there in a while. I think Miami nightlife and all that stuff is always a fun time. I remember I told you guys that super important person that messaged me like 2 months ago who lives in Miami, who bought a lot of pound here at, what did he buy it at? He bought it at $30 and then he reached out to me. I hit him up last week. I'm like, yo, I'll be in Miami if you want to go get dinner. And then he was like, yep, let's do it. So I really hope he'll let me take a picture of us and post it on Twitter. Because that'll be a fun picture, bro. That'll be a fun freaking picture. I already have the caption in my head on the picture. This is how content creators are. Like I already know the caption in my head. But he's more of a private guy, so I don't know if he's gonna want me to post the picture. That'd be really cool. That'd be really cool. So it should be fun, dude. I think Miami will be fun. Get to meet a lot of people. I'm so excited to meet everybody at the actual meetup. And there's a lot of people that are coming. So I've just been emailing, communicating with a lot of you guys. I mean, it should be a fun time. It should really be a fun time. And it is a good way to end out the summer, I think, as well. It's a good way to end out the summer. So I'm not going to post the sign up link in the chat because we already have too many signups. I will post the sign up link again if we max out on the max number of people by middle of this week. So, which I don't think we're going to hit the max by the middle of this week. So then I'll put it up. But I just want to give everyone who already signed up over the past month the chance to complete the steps that are needed to be able to officially confirm your spot. And if we're under capacity by middle of the week, which I think we will be because not everyone who signed up is going to show up, I'll put the link again in the chat and then new people can sign up. And then we'll do it. It should be fun. It's not PBD. It's not PBD is cool, but this guy's like bigger than PBD in my opinion. PBD is bigger in media, but this guy's bigger in like life. It's like way bigger than PBD. So it should be fun. It should be fun. It's not Scottie Pippen. Does he even live in Miami? Although he's getting super bullish Bitcoin, but it's not Scottie Pippen. Does the unemployment count include all the government employees that will be officially off the books come end of September? That's a good question. I think, honestly, I don't know because they've already been fired technically, right? Even though they're getting severance. Unemployment, even if they do come off the books, though, I mean, unemployment's at 4.2. I doubt unemployment meaningfully goes up to like 4.5, 4.7, maybe goes up to 4.3, but I don't know if it's going to be that aggressive on the actual labor market data, but we'll find out going into the end of the year. It's not Ken Griffin, although I want it. Ken Griffin, I think I could get a podcast with him, dude. That guy loves to talk. Like, have you ever seen an interview with Ken Griffin? He loves to talk. Like, he's one of those guys. He's one of those billionaires that loves to just like talk. So I feel like if we got him in a podcast, he would definitely be down to talk, and that would be fun. So, yeah, I think Miami will be cool. I have a meeting with someone in New York this week as well. You guys will find out why I'm in New York on Wednesday, but I'll be staying late in New York in the night, which is why I can't stream the Grab call because I have a meeting with someone else. And that meeting I also think is going to be really cool. I'll share some updates on that later, but that's let's just say they work for a pretty big investment bank. So that'll be a cool meeting. I think we can make some connections happen there. And then we'll keep going. Wow, they bought more. There you go. SharpLink, 77,000 ETH. That's a little bit less than Tom Lee. Tom Lee owns 560,000. SharpLink, they just bought another 77. Is that stock moving overnight? 8%. That's 8% up. There you go. Dude, the Ethereum race is on. The Ethereum race is on. And it's going to be exciting. It's going to be very, very exciting to see what happens with Ethereum. Do you have a schedule for meetups till end of year, like a rough draft? So August is Miami. I was saying September would be LA, but I think that's going to have to be delayed, dude. I don't think there's going to be time in September because September, a lot of other stuff is happening. So I think September, LA might have to be October. And then November will be New York again. December's a wild card. We might have one, we might not. But October also, we might do Vegas. So we might do September and Vegas inside of the month of October. But yeah, I don't know if LA is going to be, because there's so much stuff happening in September already in regards to different events. I don't know if LA is going to make it possible, but definitely Miami in August and New York in November. Those two, I think, are like set in stone. And then we'll just see what else we can do towards the end of the year. BMNR doesn't trade overnight. That's why it's not moving. So that's why you're not going to see too many others. The order on the stock draft right now is Matt, Tanner, Amit, Steve, and Chris. Matt, Tanner, Amit, Steve, and Chris. I mean, it doesn't update with the after-hour prices, but yeah, that has been the order for a while now. If I didn't have Duolingo, I think I would be number 2. Because Tanner has a great list, but my list has not been doing bad. It's just freaking Duolingo has been destroying it. Matt's up 20%. Tanner's up 10. Look, I'm at 9.0. Tanner's at 10.7. I'm less than 2% away. But I've got this stupid language learning app that I thought was going to like help. That's just been dragging it. And that one's hurting. And then Steve's up 2.59, and then Chris is up 1.5. By the way, I think Duolingo is a great company. I think they can do very well. I just think I picked it at a high price. So if I can even break even on that by the end of the year, I would be happy. But yeah, I'm going to need the others to step up a bit as well. But AMD is doing great. That's up 30%. Hoodie's up 36. Palantir's up 12. Tessie's down 4, but I think Tesla will get back into that 340, 350 range, hopefully by end of year. Grab's up 14%. Apple's up 8. Visa, although that one was hurting, that's still flat, up 1%. Then Duolingo is the one that's hurting the most. But Matt got Rocket Lab, SoFi, ABCL, Oscar, which actually was down, but that was up a lot for him. Otherwise, he would be up more. ASTS, and then Tanner has Nvidia, Coinbase, TSM, AppLovin, which have not been too bad. All right, cool. I think that's it. We are done for the day. We'll be back tomorrow on the Market Open. Keep going from there. It's an exciting week. This is week 4 of Q3. And if we can put up some really good earnings growth, then hopefully the momentum can continue. Yeah. And then we enter August after next week. This is the last week of July, which, again, time is moving way too fast, in my opinion. Like, legit way too fast. August 1st is on Friday, bro. August 1st is on Friday. So, yeah, we're going to end out the month of July, start Q4 in about a month. And then we have September through December. And it is going to be very important to kind of see how we can end out the rest of the year. But this is the big week. This is the Super Bowl. This week, 40% of S&P 500 companies are reporting. We got to make sure this is a good week. And we got FOMC. So when you put all those two together, this is probably like one of the biggest weeks of July. Why does everyone say August will be bearish? Because historically, August is bearish. So hopefully August does not stay bearish. Again, I'm still like I agree, August, we could probably get a dip. But with all of this bullish momentum, particularly around trade deals, is this the year where we avoid it? I don't know. But if it is, India, South Korea, you get any of those announcements towards August, I mean, you're going to have the market buy any dip because people are not going to feel like there's some major macro reason to be upset. Remember last year, the August dip, the only reason we got the August dip last year, well, not the only reason, but it was one of the main reasons. We did have a general little sell-off, but the yen carry trade. We don't get that again. Then maybe we can hold up. But we're going to have to see if we can get through this week and we get good earnings along with these trade deals confirmed, then I think we're good to go. And then we'll kind of see how the rest of the year plays out. All right, folks, that's it. Thank you, everybody. We'll be back tomorrow on the Market Open. We'll keep going from there. Appreciate everyone being here. And that's it. We're ending out the show. Thank you, everybody. See you guys tomorrow on the Market Open. Bye, everyone.